Okay, lads, we'll have a go doing the video from the question for the mock. It was obviously a tough one. The first few workings were grand, but there was a few tricky ones thrown in the middle of it that might have got some of you. So obviously I did it. I put up the answer into the classroom, but I made a few mistakes in it myself. I was trying to do it while I was talking to someone at the same time. But anyway, we'll hopefully rectify those and get it right this time. So the first working is your stock working. So that's your general damage stock working. So stock cost was 61.8, and that includes damage stock which cost 8.6. So take that away and then add on its value, which is 6.3. So just add those on. So that's that one done. So easy enough. Second one is your depreciation working. So we'll just have a quick read through it. There's nothing nothing out of the ordinary there. So it's your standard depreciation working. So the first thing is to work out your delivery vans at the end of the year. So delivery vans at cost were 126. Take away the old one. So you traded in a van costing 30 against the new van costing 38. So minus 30 plus 38 brings you up to 134,000. So then your depreciation of delivery vans. The rate is 15%. So it's 15% of 126. And you're working around the first date. So 15% of 126 multiplied by 5/12. And then it's 15% of 134 multiplied by 7/12. Remember, it's always going to add up to 12/12. So by 5/12 and 134 by 7/12. So if we just add those two together, that'll give you your total depreciation. 19,600. So the second one then is the accumulated depreciation of delivery vans. So that'll start off with the difference between the 126 and the 111,500. So what's that? 14.5. Obviously add on the 19.6. And then we need to take away the depreciation on the van that we sold. So that'll be 15% of the van we sold, or the one we traded in cost 30,000. So 15% of 30,000. And you had that for a whole load of months. You had it for, well, not too many actually, 10, 11, and 12 in 2017. So 3 months in 17, all of 18, and 5 months in 19. So 12 plus 3 plus 5, so that's 20 12s, 20 months. So I'll just work that out. So it's 7,500. So 14.5 minus 7.5 plus 19.6 will give you 26.6. Okay, profit or loss on the sale. So it's the one we sold. So its value is it's what it cost, 30,000, minus its accumulated depreciation of 7.5. We just worked out. So its value is 22.5. You got an allowance in the question of 20,500. So you got 20,500 for something worth 22.5. So that's a 2,000 euro loss. Okay. So the second one then, or the last part, is the check for the net amount is included in purchases, which of course it shouldn't be. Basically everything we've done there is what you should have done. So the check for the net amount is the new van minus the allowance. So New van's 38,000. The allowance is 20,500. So that's 17,500 needs to get taken out of purchases. So it's 492,300. Sorry, yeah, 492,300 minus the new van 38 minus so minus 17,500. That's just 38 minus 25 is 17,500 gets taken away. Okay, so that's that working. Working 3, the suspense working. Now, so this part, it's not new or anything. You've seen it in suspense questions and all that. It's tricky. I'm going to show it to you using a T account just to make things easy. But the first part is fine. It's the incorrect figure for mortgage interest. So it's our mortgage interest working. So usual crack with the mortgage interest, go up and check it. So it's a 6% fixed mortgage, including an increase of 70,000 on the 1st of the 6th. So we're going to work out what the mortgage interest is. So it's 6% of 130,000 by 5/12. And then it's going to be 6% of the 200,000 that you have for the remainder of the year by 7/12. So in total, it's 10,250. Okay. What it tells us is the mortgage interest for the first 5 months is 2,850. So this is the actual figure. That's correct. 2,850 is what they have. So that's the mistake. Okay, so the difference between those is 150 is 400 euros. So we've added on 400 onto this 2,850. So that means this goes up by 400. So it's 400 bigger than this side. So the debit side at the moment is 400 bigger than the credit side once we've changed this to 3,250. So to make it back equal, we have to take 400 away. So insurance 18,9, we have to take away 400 to make it continue to balance. So insurance starts off as 18,9 and minus 400. So now this has gone up by 400 to 3,250. Insurance has gone down by 400, so it continues to balance. Okay. The second part, a payment of 4,700 entered on the incorrect side of the bank account. So that is saying that they've put it on the correct side of PAYE and PRSI. So what does that look like as a T account? So we'll just show you what it looks like. So we've got our bank account and we've got our PAYE and PRSI account. And it tells us that a payment of 4,700 was towards PAYE was entered on the incorrect side of the bank account. So money going out, that is the credit side here will be the correct side. And it's telling us they have put it on the debit side. So they have put 4,700 on this side. So if this was a suspense account, that'd be step 1. That's what they've done. So undo what they've done. 4,700, that'd be step 2. And then step 3, do what they should have done, which is put it on that side as well. So now, remember, we only journalize what we're doing. So in effect, to fix their mistake of putting 4,700 on the left, we have to put 9,400 on the right. So the bank, we need a credit of 9,400. So bank is a credit of 9,400. So bank assuming it's an overdraft, 18.7 overdraft or credit, we're going to credit another, crediting it in credit. So we're adding on another 9,400 onto bank. Okay, so that'll be our bank element done. Just so as we're clear, the double entry, you have to assume that they put the PAYE on the correct side, so it doesn't tell you otherwise. Okay, so there's no change to that. Okay, so the bank overdraft is going up by 9.7, or sorry, by 9.4. So this side goes up by 9.4, which means this 1713 is up to 1722. It's 9.4 more on this side. So if this is 9.4 greater, we have to add 9,400 to whatever incorporates suspense. So plus 9,400 there. And that fixes our suspense working. I'm not sure if that's been in any question before. I'll have to look back at some of the other question ones, but if you know your suspense, undo it, do what they should have done, and remember, just only ever deal with what we generalize. It should make sense. Okay. In simple terms, if something is put on the wrong side, to correct it, you double the number and put it on the other side. So that's working 4. So working 5 was discovered that finished goods had been received from a supplier on a sale or return basis. Now, these goods have been recorded as a credit purchase of 24,600. This includes VAT of 23%, so this is tricky enough one. What it's telling you is you've bought goods on a sale or return basis. Normally it's you sell goods on a sale or return basis, and it's easy enough. We know if we sell them on a sale or return basis, you reduce sales, you reduce purchases, and you reduce creditors. So you'd have to assume you do the same when you buy goods on a sale or return, on a purchases or return basis, that you reduce purchases, you reduce creditors, and you reduce stock. Okay. Now the really important thing here is you cannot include the VAT. All right. So it's telling you that the number is 24,600, including VAT of 23%. So we need to work out what the cost prices of these. It's nearly like the purchase goods, including a profit margin. You always work back to the cost price. So we take the 24,600 and we're going to divide that by 123 and multiply by 100. All right. So 24,600 divide by 123 multiply by 100. So the cost price is 20,000. So purchases has to go down by that. Okay. Now, just let me read this again because I'm not 100% sure. These goods have been recorded as a credit purchase of 24,600. The figure includes VAT of 23%. Now, this is one of the mistakes I made when I was doing it. I've basically misread that a little bit. So what that's saying, it was discovered that finished goods have been received from a supplier on a sale or return basis. These have been recorded as a credit purchase of 24,600, including VAT of 23%. So it's basically saying that they've recorded it correctly. So they've recorded it as purchases of 20,000 and VAT of, I'll just put that there, the VAT is 4,600 to bring you to the 24,600, but they have correctly dealt with the 20,000 and the 4,600. So what does that do? If you undo what they've done, it means you have to reduce purchases. So you're going to credit purchases by 20,000. So purchases is going down by 20,000. So we're going to credit that. And we're also going to credit the VAT by 4,600. So if we credit purchases to get rid of it, we also credit VAT. So VAT has to go down by uh, 4,600 as well. VAT is a debit. So VAT is a debit. Just be aware that that's money owed to us. So at the moment, VAT is 12,600, and we're going to credit this 4,600 away from it. Okay. And if VAT was a credit, say VAT was on this side over here, you would add it on because you'd be crediting a credit. So just with that, be careful. You're crediting purchases. So to reduce purchases debit side. So to reduce it, you're crediting it. So if there's VAT, you also credit VAT as well. So if you credit purchases, you credit VAT. It's one little thing to be careful of. Okay, so VAT has to go down by the 4600. Now, creditors then also has to go down. Now, creditors goes down by the full amount. So remember, creditors always includes the VAT because you have to pay the VAT to the person you buy the goods off. So creditors goes down by so it starts off at 63,000, and we're going to take away the 24,600. So in effect, we're debiting creditors by 24,600. So if you think about the double entry there, we've got a debit of 24,600 for creditors, and then we've a credit of 20,000 and another credit of 4,600. So we've debited 24,600, we've credited 24,600. We've just split them up into two different amounts. Okay, just be careful with that. I can pretty much guarantee that that will not be asked that way in your leaving cert, because I think it actually goes against the accruals concept. Anyway, that's for another day. We'll look at that some other time. Okay, so that's your that's that working there. The purchases and the credit purchases one. Working 6 then, the check for 1,400 had been received in respect of the debt of 3,000 previously written off as bad. The debtor wished to continue to trade with Dalton and has agreed to pay the remainder within 1 month. No entries made in the books. Now, this one is straightforward enough. We've seen it in all the questions we've done. The full amount of the debt is a bad debt recovered. Okay, so the full 3,000 is a bad debt recovered. The check for 1,400, that reduces the bank overdraft by 1,400. And then debtors, I'm not sure if we've changed debtors yet. No. Debtors has to go up by the difference. So debtors goes back up by the 1,600. So debtors started off as 71.5, and we're going to add back on the 1,400 onto that. Okay, so sorry, 1,600, isn't it? What was the check for 1,400? So we're adding the difference, 1,600, onto debtors. Okay, so that's that working done. Nice and easy. It seems more difficult than it is. So the full amount is bad debt recovered. The amount you receive goes into the bank. The difference between what you receive and what you're going to receive is added back onto debtors. Working 7, goods taken by the owner for private use were not recorded. They the retail value again. We just work out the cost price, and we're doing nothing with these cost prices. The retail value of 12.6, which is cost plus 20. So we take the 12.6 divided by 120, multiplied by 100. It's 10,500. That gets its stock drawings. So we're taking the 10,500 from purchases, and we're going to add that 10,500 onto drawings. So drawings started off as 12.8. We're going to add on another 10.5. Okay, that's that one done. A new warehouse was purchased during the year for 90,800, which includes VAT of 13.5%. The amount paid to the vendor was entered in the buildings account. No entry was made in the VAT account. Funny enough, I was going to do another video back 2012, maybe the next one back from the ones I posted earlier on. I thought, God, I've done all the workings and all the other ones. I don't need to. And then I'd seen that I hadn't done this working yet. This appears in a couple of Sole Trader questions a few years back. So it's again understanding your rules of accounting. You can't include VAT in anything other than the VAT account. So the new warehouse was purchased during the year for 90,800, which is includes VAT at 13.5%. So we have to find what the VAT amount is. So we take the I'll just work it out here. Again, we're going to use this figure, but it's not a. It's a bit like the cost price thing here. We're not going to use it in our answer. We'll just use it as another working within the working. So if 90,800 includes VAT at 13.5%, well, we need to find what that 13.5% is. So we're going to divide that by 113.5 and multiply by, that brings to 1%, and multiply by 13.5%, and that'll give us the VAT figure. So that's 10,800. I'd say a vague recollection of having decimal places or something earlier on when I did this. Anyway, that 10,800 needs to get taken out of buildings because it's included and it shouldn't be. In effect, we should have included 80,000 in buildings, the amount minus the VAT, and we've included 90,800. So we need to take it out of buildings. So we're going to credit it to buildings. So we're taking it out of buildings, crediting it. So building starts off at 785. And we're going to take away crediting 10,800. That means we're going to debit it to VAT. All right, now I've got a VAT up here. Where have I got VAT? VAT is a debit. So if we're debiting a debit, it's adding it on. So it's 10,800 gets debited to VAT. If VAT was a credit, if you debit a VAT, if VAT started off as a credit and you debit it, you would take it away. So debiting debits is adding on. Okay, just be aware of that. So again, I'm crediting it from buildings and I'm debiting it to VAT. I'm taking it away from buildings, so crediting from buildings, therefore debiting it to VAT. All right, that's that one done. Buildings. So provide for depreciation at the rate of 2% per annum. Because so the depreciation of buildings should be 2% then of the 774,200. It's 15,484. It's a stupid number, but anyway, it's correct. All right, it's then telling you you're going to provide for revaluation of buildings up to 950. So instead of accumulated depreciation, you're going to have a revaluation reserve, which starts off as the difference between your two buildings figures. So 785 and 610 is 785 and 610 is a difference of 175,000. That's your starting figure for accumulated depreciation. We're going to have to add on the 15,484. And then we're also going to add on the difference between 774,200 and the new value of the buildings, which is 950. So we have to get them up to 950. So what's that? Another 100 and So 175,800 bring up to 950. It will, yeah. So 175,800 gets added on to bring up to 950. So therefore, in the revaluation reserve, we add on that 175,800. So 15,484 plus 175,800. It's 366,284. Doesn't seem right, but we'll go with that. Hopefully it balances. Then these three things here at the end, it's not that they were new, but the rent due and the depreciation of office equipment, they're not new. We've seen them before, but they might have thrown you a little bit. So it says provision should be made for rent due on the 31st of the 12th. So if we look at what the rent is, let's have a look, sorry, in the question. The rent is rent paid to the 31st of the 10th, 2019, and it's a credit. So it's rent receivable because it's on the credit side, it's an income, and that's 12,000. And it's telling us to take for another 3 months rent. All right, so it's 2 months rent. It's up to the 31st of the 10th, so we have the 11th and the 12th. So that's 12,000 is 10 months. Okay, so if 12,000 is 10 months, and we're asked to find 12 months, well, 2 months is 12,000 divided by 10, multiplied by 2, which would be 2,400. So that 2,400 gets added on to the 12,000, bringing up to the 12,400 rent receivable for the year. Now that 2,400 is rent receivable due, and it's important you don't forget that. That's really what you're asking the working anyway. So rent receivable due is a current asset when we come to it later on. Okay, so that's that, nothing hard there. Mortgage interest we've done. Mortgage interest due, let me just go up and check. Right. This 10,250 is the mortgage interest. The 7,000 is going to be mortgage interest due because we've paid the 3,250. I'll actually write it down. So mortgage interest due. If we're going to pay in total 10,250 and we've paid 3,250, that was the figure we worked out. That means there's 7,000 due. Okay, that's that. Then we're asked to work out investment income and investment income due. So the investment income is 4% investment, so 4% of 120. And you got the investments on the 1st of the 6th. So you didn't have them for the first 5 months of the year, so you had them for the last 7. So it's by 7 12ths. That's 2,800. And the investment income due, you've got 2,800 minus whatever we've received. So does it tell us we've received anything? Oh, it does, strangely enough. Right, this, I don't know how they would, I'm sure this caught loads of you. It says advertising incorporating 3 months investment income. So 3/7 you've received. 3/7 of 2,800. which is 1,200. So mortgage interest due is 2,800 minus 1,200, which is 1,600. Now, what does that do to the advertising? It's a bit like with the patents, right? Advertising is an expense. Just show you what this looks like in a T account as well. So advertising is an expense. So advertising is in effect 5,000, right? I'll show you why. So expenses have debit balances. If they've included the investment income on it, they've put 1,200 on the credit side. So when they balance it, it balances at 3,800. So for the advertising, the correct figure, it's the exact same as the patents. To get rid of it, you have to add it on. So it's going to be 3,800 plus 1,200. Now that might have thrown, I'd say that threw a good few. That you wouldn't have seen that before, but you have seen it in the context of patents. It's the exact same. It's the same reasoning as with the patents incorporating the investment income one. So that's your advertising there. Okay, so I think that's stacking all of our working. Investment income due, we've done that. So depreciation on office equipment. Is 10% of the office equipment. So where's the office equipment? So 32,000, so it's 10% of 32,000, which is 3,200. And then your accumulated depreciation. Accumulated depreciation is 32 minus 27,500. So 4,500 plus the 32 is 7,700. Okay, so that should be it. That should be all of our workings done, and hopefully it balances this time, right? So I'll go through it. I'll hopefully get this right, take as much time as we can on it. All right, we'll see how it goes. So again, I'm going to work from top to bottom, so it just might take me a bit of time. So sales is 851. Now we haven't changed sales, so that can go straight in. Less cost of sales. We know opening stock never changes, so stock first to first 55.5. Purchases has changed, so let's look to our purchases. So it's 4,92300 minus 17.5 minus 20 minus 10,500. So that's right. You get a feel sometimes when the number isn't right, that looked way too big. So hopefully that's right. 4,44300. And then our closing stock are also from our first page. So closing stock is 61.8 minus 86 plus 43. So 57.5. So okay, so we'll put that in 57.5. There's a chance. So I just want to go back to one work and see if I put in the. Okay, I should have also, this goods on a sale or return basis, I even mentioned it during the question. You take it from stock purchases and creditors. We take this 20,000 from stock as well. I think we do anyway. Let's check the working scheme after. So that's 37,500 there. Sorry, it's 39,500. So 61.8 minus 8.6 plus 6.8. Still 8 money. It'll give you 39,500. Yeah, that's right. Okay. So we'll just take them away from each other. 390,700. I should have really waited till Mr. Bradley produced American skins for these. Anyway, we'll just go through the rest of the expenses. So we've obviously got our depreciation of delivery vans. If that's of buildings in our domain. So that was 15,484. Then we have depreciation of office equipment. That's 3,200. We will have, I have a feeling, did I skip a working? There was patents or something in this, wasn't there? Yeah, I did skip a working. So remember, Jamie asked me a question on this when I put it up. So patents are written off over a 6-year period, which commenced in 2017. That implies, if we're doing the accounts for 2019, that implies we've 2 years depreciation included already. So this is 4/6. So to find the patents written off, I'll just do it here. It's 48,000. If that's equal to 4/6 of the original value, you just divide that by 4, and patents written off will be 12,000. Okay. So it's 48,000 divided by 4, which is 12,000. It is not 48,000 divided by 6. It's telling you that they've already started depreciating them. Okay, so there's our patents. Investments, stock purchases, discount, net, other operating income, commission is selling, rent, other operating income, provision for bad debts. Next one is salaries. And that is, there was no change there, so 115,800. And then we should have insurance including suspense, so that's from our workings. So 18.9 minus 400 is 18.5, plus maybe 27.9. Okay, so 27.9 for our insurance. Let's slot that in. I'm fairly sure that's them all. Add them up if I've left one out. I'll go to cheat and throw it in selling and distribution. Yeah, no, that should be them all. All right, so selling and distribution then. Well, we've got our depreciation of delivery vans, which, let's check there, the depreciation of delivery vans. One of the early ones, 19.6. We have a loss on the sale of vans, again from the same working, was 2,000. We then have advertising, the last working. Now, advertising was 5,000 euros. That was the most recent working. And have we any other ones? We have commission here of 10,100. That didn't change. Again, if commission was on the credit side, it would be other operating income. So let me just have a look through. Nope, that seems to be them all. So our total expenses 201,084. This looks horrendously wrong, but sure, we'll see in a while. Other operating income, we have a few of them. We have our rent receivable, bad debt recovered, and we should have our discount net of 4.5. That's the only one that hadn't changed. So the rent receivable was towards the end. It is 12,400. And then the bad debt recovered was 3,000. So 12,400. It's 12,000 the question, so it's 14,400. Just change that. So the joys of being able to see the question in front of you at the same time. All right, so just add the three of those on. 201,516. Then we have our usual investment income. 2 something, 2.4, 2.8, or yeah, 2.8. 204,316, and then we've our debenture interest or mortgage interest. Mortgage interest. It's up here somewhere. 10,250. It's our total. Just make sure there's no drawings in the mortgage. Often they put in that. Nope. So 10,250 can go in. So it's 194,066 for a net profit. Okay. Over to our balance sheet. So the patents was 48 minus 12, which is 36,000. Okay, land and buildings was revalued to 950. I'm going to just move this 36,000 over here. You only have 3 lines in your thing. Motor vehicles, they were cost 134. Your accumulated depreciation is 26.6. So the values one minus the other. Now there was also office equipment, which is a fixed asset. So office equipment was 32,000. There was accumulated depreciation of office equipment, one of the last workings, if not the very last one, yeah, of 7.7. Giving you 24.3 as the value. So we'll add those together. And then we put in our investments. 4% investments, 120. And then your fixed assets will be the 120 plus the 108,700 plus the 36,000. So 123,700. Current assets, well, we've got our closing stock, which is 55.5 or something like that. Closing stock was 39.5. Our debtors less BDP. Just move that over here. Debtors think changed. Yeah, 71.5 plus 1600. So it is 73.1. There should be a BDP, provision for that, it's 2.9. 70,200. Stock debtors. Investment income due, which we always have. Just down the bottom somewhere. Investment income due 1,600. We've our rent receivable due. Our new working there from near the bottom. The 2,400 at America's current asset. So if it was rent due, the apparent liability, because it's money out to us, it's current asset. And then is there VAT? There's VAT, assuming it's still on the debit side. Have a look. So 12.6 minus 4.6 plus 10.8 is 18,800. So now, at this stage, that adds up to 132,500. You can just check everything from the debit side should be in bar the drawing. So that is in insurance, mortgage interest paid was used to work out mortgage interest due, advertising is in, salaries is in, commission, purchases, opening stock, debtors is in, investments in, patents, and your three fixed assets. So they're all in. So you're onto your liabilities. We'll have our creditors. So that should have changed in our workings. So it's 38,400. So that's your creditors. So we're looking for liabilities. We'll check this side here first. Bank. And we know bank has changed. So that's 19,500 for bank. Let's see, right. Banks are of it. That's 18.7. Jesus God. So even worse. It's bank 56,000. So I find these a little bit hard to read at times. So just be careful. So bank was 56,050 to start off with. Sorry, I took the wrong number. So therefore 66,850. All right, we'll put that in. So I'm just not happy with that bank figure. I done 50s 56,050. That's 50, 65. So that's be less than 65. So 56,050 plus 94 minus 1400. That can't, sorry, I've got that as a plus there. That number looked completely wrong. Oh God, making it worse. Sorry about this. 64,050. If this doesn't balance, definitely goes that bank number. Just 64,050. All right, that's the bank. We've got mortgage interest due. So I'm just putting myself under a bit of pressure now. I think I've just made a couple of mistakes. Won't find it. It's mortgage interest due 7,000. What else have we got? PAYE, and that hadn't changed, so that's 18,700. Just check everything from the right is now in, bar the capital. Yep. So if we add them up, we get 128,150, which we're going to take away from the 132,500 to get 4,350 again. Add that onto your fixed assets. You get 124,250. Not sure how we're going to get that to balance with the numbers for the depreciation. Anyway, right, the mortgage is 200,000. You've got your capital at the start of the year, 505. You've got your revaluation reserve, which is 366,284. Your net profit, this might help us, there should be a 6 in this one, 94066. And then you've got your less drawings. I'm just going to add that together like I would in the market scheme. Less drawings is where are my drawings? 23,300, which will take away. Add that 20,000 on, you get 106. I'm miles off. Sure, it's not 20,000, 200,000. 1, 2, 4, 2, oh, that balances. Excellent. So that's it done. Look, there were a few little tricky things in that, certainly around the rent due. This one here, the insurance, or not the insurance including suspense, that was tricky as well. The advertising including 3 months investment income. So always just think, where have I seen including something before and what do I do? Okay, so if it's income included on the debit, you add it back on to get rid of it. That's basically a rule for it. Anything else? It's obviously the suspense. If it's on the wrong side, you have to add it back on twice. And this VAT one here, I don't think they'll ask that in the leaving cert, because I actually think that what I did there is possibly wrong. I'll have to wait till the marketing scheme. With the accruals concept says you shouldn't include that, or you should include it because it's a loss that may incur. Anyway, that's that. I'll see you all next week, lads. Hopefully, obviously, please don't look over this over the midterm. Just maybe in study later on. All right, well done.